Hi, this is Daniela Cambone for StansberryInvestor.com, and we're continuing here with our educational content. I've brought back Mark Yaxley. He's the managing director over at Strategic Wealth Preservation, a bullion dealer and a storage facility based in the Cayman Islands. He joins me still inside the vault. Welcome back, Mark Yaxley, to StansberryInvestor.com.
Always a pleasure to be with you, Daniela.
Hopefully not getting dark and lonely in that vault, Mark, but thank you for giving us this access that we wouldn't otherwise have. Thank you.
You're welcome. We look forward to sharing as much as we can with your followers.
Yeah, well, look, we covered coins versus bars. We covered gold versus silver, and I'm getting emails. People want more. And I thought, okay, well, why don't we cover a topic that we often get asked? When it comes to buying precious metals, how do you know when you're getting ripped off? How do you know when it's a good deal? And how much should you be paying over spot? Which leads me to my first question to you, Mark. What is the spot price? A lot of people might be saying, how are gold, silver, platinum, palladium, how are these metals even priced?
Right. People that are inside the industry, all take for granted that everyone around the world knows what spot means. But I think it's really important to start with a definition of the spot price. So, in simple terms, the spot price is the real-time international value of the underlying commodity. So that pure ounce of gold, one pure ounce of gold, when you see the price on the news, or you see it on a financial website or on your cell phone, on an app, what you're seeing, that spot price that you're seeing, is the international value of 1 ounce of that commodity. So whether it be 1 ounce of gold, 1 ounce of silver, 1 ounce of platinum, palladium, etc. And that spot price really serves as the basis for this conversation about premiums and spreads. And am I getting a good deal? You first have to know, well, what am I looking at when I see that price? But the important thing to know right away is that price does not include the fabrication, the delivery, the whole supply chain, the manufacturing of these physical products does not include that.
Right. So something to keep in mind when you are buying physical, you're not just paying for spot, you're paying for premium over spot.
That's right. So
please.
So I was going to say the total price that you're going to pay for a physical product, the equation is total price equals spot plus premium. So we've already discovered what the spot price is. The next thing we need to understand, which is the topic, I guess, today, is really diving into premium. And that premium is where all of the players in the supply chain, from the refinery or the mint that is producing that physical product, all the way to the retail investor, all of those touch points in between, everyone makes their living inside of that premium.
Gotcha. Okay. But the premiums I've been seeing this year and last, Mark, have been premiums I've never seen. I mean, even looking at the American Eagle, 40% over spot price industry average today.
Yeah, there's a lot of things reflected in that premium. The premium actually tells a huge story about what's happening inside of the precious metals industry. Obviously, there are fixed costs. There are certain costs to manufacture that, they're always going to be there. There's not going to be any change to those, relatively speaking. But you also have supply chain issues. When the cost to ship goods around the world is affected by COVID because there are less commercial flights or less FedEx flights in the air, transportation costs increasing, that's going to affect your premium. Demand for the product is going to affect your premium. When the distributors and the wholesalers and the retailers know that there's a strong demand for 1 ounce silver eagles, for example, they're able to charge more for that product. So that's reflected in the premium. Mm-hmm. And the newest element to that, which we hadn't been worrying about, but now we really have to consider, is inflation. The cost to produce anything these days, from start to finish, whether it be the machine that makes these rounds in these bars, all the way again through that supply chain, the fuel costs, the salary to the driver, all of those things get factored in. So now that inflation is a reality and we're starting to realize how serious it is, again, that's probably going to bolster premiums for investors.
That's a really good point. Inflation hitting the precious metals sector as well. So how much premium should you be paying? How do you know if you're getting ripped off for a good deal?
So it's kind of a two-part answer, Daniela. The first part is obviously when you're acquiring these products, your goal, simply put, should be to save as much premium as possible. It's kind of one way to look at it. It's like when you're shopping for anything, you do want to make sure that you're getting a good quality product. So let's not downplay, quality versus quantity, but if you're focused on good quality products or brand names that have good resale value, as long as you're focused on that group of products, then you're trying to pick the ones inside that group that have the lowest premium possible.
Right.
So for example, right now, if you're looking at 1 ounce silver products or silver in general, you could look at a 1 ounce silver eagle, which is kind of at the high end of the premium scale. And it's going to be at like 40% premium, which is, in my opinion, just kind of ridiculous. You should never pay a 40% premium on an investment of any kind. But on the other end of that scale, you might have a product like this, for example, a 100 ounce silver bar, where you can drive your premium down right now, still very high, but right now about 10% retail. So you can go anywhere from a 40% premium down to a 10% premium while still owning physical silver. So your goal as an investor would really be to try to pick the products that offer you that lowest premium. And then you could tell yourself, I'm getting a good deal. But the second part of that is, when it comes time to liquidate that product, will that 1 ounce coin have a better resale value than the 100 ounce silver bar? The truth is, yes, it will. But will the resale value recover all that additional premium that you paid up front? Probably not. So you're looking to try to find products that have the tightest overall spread. So the premium up front and then that discount when you sell it, you're trying to narrow that total spread as much as possible. And that's kind of where you find the good deals in precious metals.
Well, talking about the good deals, you held up the silver bar there. Do you have any other insights or products that you think in terms of quality vis-a-vis price makes sense today?
Yeah, I mean, we've talked about this in the other videos, but it's always worth reinforcing with people, because people tend to get stuck on particular brands, and they tend to get stuck on recommendations that they've heard. And market conditions change, premiums change, and so you need to do that simple math to look at the premiums and the total spreads every time you go into the market to acquire precious metals, or when you're selling again. You're going to look for the best deal possible on the way out as well. So a few products that I feel are of good value, definitely if you're looking, or if you can afford to go up in terms of the denominations. If you're looking, for example, to buy 10 ounces of gold, you could either buy 10 1 ounce coins at a premium of 3 to 5% over spot, or you could buy 1 10 ounce bar. It's the equivalent. 10 of these would be the exact equivalent amount of gold as one of these. And you'd probably save about 1% on your premium by buying this gold bar, maybe even a little bit more. So if you kind of multiply that out over your lifetime as an investor, it can amount to thousands of dollars that you could have been buying more gold with. So you definitely want to look for those deals. So gold bars are really one of the best ways to own precious metals in terms of just talking from a premium standpoint. And if you can go even bigger, we've looked at that before, where you scale up from a 10 ounce bar, for example, to a kilo gold bar. Again, you're going to save like another 1%, and you can buy more gold with that money. So, general rule is, if you can go bigger, and bars will be a lower premium than coins, which we've talked about before.
Really good insights. We spoke spot, we spoke premium, but the other magic word here is spread, right, Mark?
That's right. So taking the concept of premium one step further. So we have another term I'll introduce. I know this all sounds convoluted. It's actually really, really simple. So premium is the cost above the spot price to acquire. We know that. When it comes time to sell, it depends on what product you're selling, what the market conditions look like. You can either get a little bit above the spot price when you're selling, or a little bit below. Generally, I tell my clients, expect to get the spot price, but we call that the discount. Usually the term that we use is the discount that you're going to get when you sell. Are you going to get 0.5% under spot? Or are you going to get 0.25% under spot? So once you know what it costs you to buy it, and then once you know what it costs you to sell it, when you combine those two things, you've got the total spread. What is my total spread on this product? And that's really what you're after. Because if you're focused entirely on saving money up front, and you don't look at the resale value or the discount that you're going to get when you sell the product, then you might miss something really important. Because, for example, this 1 ounce gold coin we talked about before, that's going to have a higher premium per ounce than this 10 ounce gold bar, also has a better resale value than this 10 ounce gold bar. So the total spread, in theory, could be narrower on this 1 ounce gold coin than on this 10 ounce gold bar. Even though you save money up front, this has better resale value, and that total spread might actually be better on this 1 ounce gold coin. Now, I can't give you a magic rule that applies to all products and market conditions, Daniela. That you have to do that simple math on your own. or just in speaking with your precious metal dealer, they'll be able to give you a list of the products with the best spreads and obviously more advantageous for you.
Yeah, really, really good insights, especially in this year where talk about premiums has been really the focus of the industry. Do you think it's justified, a lot of these crazy premiums that we're seeing above spot, Mark?
You know, it's like asking a question, is the salaries that we pay professional athletes justified? Chent, you know, can you make an argument that a guy deserves $10 million to hit a ball out of a ballpark? You know, probably not. But the fact of the matter is people are willing to pay to be entertained by that person hitting that home run. Investors are willing to pay silly premiums to take home Silver Eagles right now, or other products. It's not only Silver Eagles, it's really across the board. So the magic sauce here is that you have to be selective, as if you're the general manager, you're playing Moneyball, you know, with your ball team, you're trying to find the best value and looking at numbers. It's number driven. It's a little bit of math. It's very simple math, but it is math, and trying to find the best value to make up your portfolio to give yourself the best result in the long term. So if you want to be inspired, watch Brad Pitt in Moneyball, and then translate that over to precious metals.
It's such a good analogy, and as always, valuable information. Thank you for breaking down spot, premium, spread. I know it can be overwhelming, but like you said, it's really not once you start following and learning about it. Mark, I'm very envious that you were in the Cayman Islands. I know it's sunny here in Montreal, Canada today, but I'm sure you have better weather than this.
Yeah, I mean, it is rainy season right now in Cayman, so we do get a shower, you know, once a day. But it's one of those places that never seems to be a bad weather day in general. So we're very blessed to be down here, and very thankful to have you tour our vault virtually.
Yes. Mark, thank you so much. This is a real special treat for us. I know that no one has access to this vault, so to actually see it is really cool. Thank you.
Well, you're very welcome, Daniela. We hope to see you down here in person next time.
Absolutely. I'm definitely going to come down. Thank you, Mark, and thank you all for watching. We'll have much more for you, so be sure to stay tuned to StansberryInvestor.com. And don't forget to sign up for my exclusive one-on-one interview with Vince Guzzo. He is a media magnate and the founder of Cinema Guzzo, along with many other companies. He's also the star of Canada's Dragon's Den. He joins me for an exclusive one-on-one interview you will not want to miss. You can register to watch it at DanielaCambone.com. Register for free today.